Well, good morning, everyone. Hope everyone is doing well. It's a little chilly today, but hope everyone's doing well. We're gonna start our event this morning. I'm gonna let everyone in as they continue to join our webinar this morning. But I just wanted to welcome everyone. Thank you for joining us on our last professional development webinar of the year and of this series. So today's event is on alternate forms of financing. And I want to say a big thank you to our sponsors, Kaiser Mason Ball and JD Factors, for your continued support in this series and many of our events. So I do see Kevin, and I'm going to put him on the spot here. Kevin, do you want to just say a few words on behalf of Kaiser Mason Ball?
Absolutely, and thank you, Stephanie. So I have 60 minutes to speak, correct?
Correct. That is correct.
Perfect. For the whole 60 minutes. I'll fill less than 60 seconds.
Correct.
Thank you very much to the MBOT and our industry partners for allowing us to sponsor and collaborate with you. We are a business law firm in Mississauga. We're right by Square One. We've been in Mississauga for 45 years, helping private business owners with starting, growing, and transitioning their businesses. It's a real honor to be at the table with you and to talk about alternative forms of financing. It's a challenging market out there. The banks often collaborate with other institutions, and it's nice to hear for some other options in the market to find unique solutions for your businesses, kind of like what we do for our clients. So thanks for having us, and looking forward to a great presentation today.
Thank you so much, Kevin. Appreciate it. And I'm going to hand it over to Upjit, who is also on our committee, but also from JD Factors.
Good morning, everyone. Thank you for joining us. So JD Factors is proud sponsor of the Professional Development Series, and this is our last session for 2024. Looking forward to some amazing topics coming up in 2025. What we do with JD Factors is basically lending for small and medium-sized businesses. And we lend to any companies that are waiting 30, 60, 90 days to get paid from their customers. We also lend to any sectors. So we are industry agnostic. Basically, you could be a transportation company or a manufacturing company or a staffing company, or think of any service industry that waits to get paid from their clients. We can lend money to them. The product is called non-recourse factoring, and we are a premium non-recourse factor based out of Canada. We have 4 offices in Canada, lend anywhere from startup companies with first $2,500 in invoices up to 60 million revenue. So we would like to grow with you. Let me know if you have any questions about factoring and if you're looking for any lending products in the finance industry.
Perfect. Thank you. Thank you very much again, JD Factors, Kaiser Mason Ball. Thank you. So quickly, I am recording today's event. It will be available on our site in the coming days, so you can definitely look back so you don't have to jot down crazy notes, and you can just focus on today's presentation. The team will go over everything, but questions will be able to be answered. Just drop them down into the chat box, and I'm sure the team will go over at a certain time. There's going to be a Q&A portion. But on that note, I'm going to hand it over to our awesome committee who's running today's event. So Upjit, back to you. Thank you everyone again for joining.
Thank you, Stephanie. And we are having a little bit of a technical issue with a couple of our speakers, so just waiting for them to join. But I'd like to welcome Saurabh Singh from BDC, and I'll be the moderator and a little bit of information sharer from our perspective as well from the finance industry. But we look forward to providing you information on alternate forms of financing, how it's relevant to professional development. I mean, if you are in a small business, or if you're growing in a company as an entrepreneur or intrapreneur, I mean, it's always good to know about how you can grow your business, grow your investments, or what are the products out there for somebody to know about besides the traditional forms of financing. So we have BDC here today with us. We will be joined by Bav from Lantern Capital and Trina. They're just trying to figure out how to get in. But Trina was with us 5 minutes before we started and got disconnected. So she's going to be coming back online, just rebooting her computer. She messaged me, but bear with us for a moment. But until then, if Stephanie, I think you were going to pin all of us on the main screen so everybody can see all the speakers. If
you both are on right now, you're good to go. You both are on.
Fantastic. Perfect. All right. And I will hand it over to Saurabh. Saurabh, just to start with, while everybody else join us, can you tell us a little bit about yourself and your experience in the finance industry?
Thanks, Pujit. Hello, everyone. The name is Saurabh. I've been with the Business Development Bank, BDC in short, for over 17 years now. So long time coming. The gray hair have been because of BDC. But overall financial industry experience going on 25 years. BDC, as people are aware of, if not, is a crown corporation. We are owned by the federal government, agnostic to who is in the political seat at any point of time. We're run by the Minister of Industry. We have only one mandate, which is to deal with only entrepreneurs and support them in any which way we can. But that does not necessarily mean businesses don't come up with a reasonable plan to growth or reasonable plan to turn to profit. We are there in the marketplace to be an alternate, I wouldn't say a pure alternate lender. We are and have been for the last decade and a half since the last recession seen as a viable financial institution to deal with because the products that we offer help Canadian entrepreneurs leverage their cash flow to get financing on either expansion or liquidity for growth that helps them overcome the shortfalls that they are not being able to secure against the receivable margining, let's say, for example. Whether it is from the chartered banks, we help preserve the cash flow, get people into the real estates and equipment. So all in all, we're the only institution in Canada that only deals with entrepreneurs. We've got over 60,000 clients across Canada, and we're looking to provide them with not just money, but also consulting and advisory solutions, whether it is to get certification or improve their productivity or selection of a good ERP IT system. So that's us.
Thank you for sharing that. So just a question off the top of my head, Saurabh, how long you've been with BDC itself? Sorry, maybe you said that I missed it, but
17 years.
17 years. And you've been in the finance industry?
Over just between 20 to 25, 23 years now.
Oh, fantastic. So I think Bav is also joining us right now. And Bav, if you are on the call, if you can unmute yourself and do a little introduction for us with all the... we just started right now, and first question would be, tell us a little bit about yourself. So all our people who have joined us know a little bit about your experience in the finance industry and about Lantern Capital as well.
Well, thanks, Subjit, and thanks, everyone. Sometimes you budget as much time as you can, but the traffic in our city goes nuts. So apologies again for a few minutes late. Myself, Bav, I was a peer of Saurabh and learned a lot from him in my career with the BDC. So I'm an ex-commercial banker with BDC and Royal Bank. Did that for 7 years. In 2018, I left the bank, which was BDC, my last employer, and started the company Lantern Capital. Initially, we started off as an equipment finance company where we would facilitate financing for medium and small-sized businesses in Canada for their equipment finance purchases. Think about any revenue-producing asset we can finance, from a $10,000 pickup truck to $2 million crane. So having done that for 5 years, I kind of branched out and started other divisions. So now we also have a franchise lending business, working capital division, where we facilitate access to working capital and franchise lending, and also our commercial real estate finance group, where we finance commercial real estate.
Okay, fantastic. And so maybe we'll start with Saurabh here. Saurabh, like, can you tell me one of the go-to programs somebody would come to BDC for, that, you know, you talk about day in, day out to anyone walking in and, or, you know, meeting you? What would be the one program that would...
So what I'm going to do is I'm going to answer it in two prongs. So there are different facets of what BDC brings to the table. So in the core lending division, which is what I am part of, we would have basically two different sets of me, so to speak. So I deal with the mid-sized businesses, which would be businesses which have revenues of 5 million and upwards, till about 50. Above that, we consider them to be a commercial corporate clients. Then we have the smaller relationship managers, which deal with, of course, startups and revenue still about $3 to $5 million. So in our world, we are involved with everything, from real estate equipment to giving cash flow loans. But if you would ask me as to what is the one thing that the market knows us for and is approaching us, that's primarily for the real estate. Our biggest book of business in most of the metropolitan cities across Canada is with real estate. And that's primarily because we are able to provide a much higher leverage financing, because we want to preserve the cash flow of each business rather than suck every working capital for the down payment of a real estate. So that's our go-to program. We are a very patient lender, being government. We'll work with the business owners to not only tailor-make their payments rather than just a straight line slab, but we'll work with their cash flow. So that's what makes a BDC a good partner when it comes to real estate. Mm-hmm. Now, on the flip side, the relationship people who are involved with the smaller transactions or startups, mm-hmm. Their go-to program would be, again, cash flow loan, because most smaller entrepreneurs that they come to, besides equipment and small real estate, they need the cash flow injection, whether it is $250,000, whether it is a little bit more than that. Mm-hmm. It's primarily to get over that hump that either the current economic situation throws at us, or that they are not able to get from their primary institution, or it's a growth project which is not yet realized, and because of which a chartered bank is unable to provide them the lending, and they need the support, whether it's for inventory or to get better discounts from their suppliers. Mm-hmm. That's where you would find the smaller relationship managers are able to get the biggest bang for buck.
Oh, fantastic. So, you know, you're absolutely right, Saurabh. Before coming into the finance world, my mind always went to real estate and BDC. But, you know, once you're in this industry, then you learn there's so many other products that you can go to BDC for your commercial needs. Absolutely. So thank you for sharing that with us. I also want to welcome Trina. Trina, thank you for joining back. And if you can take a couple of minutes, Trina, before we go to Bav and yourself, to know more about your go-to programs at TD Bank or Lantern Capital. Just a little bit about yourself, Trina. What do you do at TD Bank, and your experience in the finance industry?
Hi, good morning. I'm so sorry I had technical difficulty getting signed on. So I'm Trina Alexander, account manager, small business. So I've been with the bank for 32 years, mostly in retail, but the last 14 years I've been doing small business banking. I'm an account manager. So I take care of the small, medium businesses. And then as the client grows, I do work with commercial, transitioning them over to there. So I work on anything from banking accounts all the way up to their financing. Mm-hmm. And being in the position as long as I am, so we do have different specialties. So I do women entrepreneurs. I'm an ally for the Black entrepreneurs. I do professional banking, and then also our professional banking strategy and franchise banking. So the professionals deal with lawyers, accountants, engineers, doctors, vets, optometrists, and many more.
Fantastic. All
Excellent.
right. Thank you,
you.
Trina. And before I go to the next question, Trina, maybe you can answer what's one of the go-to programs or go-to products that somebody would talk to you about day in, day out when they're speaking with you for their small business needs for the financing part of it?
Absolutely. So a lot of times we get, because we're doing smaller and we're sort of entering clients on when they do start up, we do use the Canada Small Business Loan, which is a government-backed program where we can do up to 90% financing, up to $1 million if it includes the real estate. So that's our go-to product for financing for a lot of startups, because we can do the 90% financing, and then the personal guarantee can be as low as 25%. We do also have a really good program which we work together with the BDC. So the BDC to us is not a competitor. We actually work strongly with them. So a lot of times we will do whatever conventional lending we do, and then BDC will come in with any shortfall. But the new program that we have, TD is the only bank that actually offers it. It's our Business Accelerator Loan Program. So loans are low as 25,000 all the way up to 500. The business just has to be operational for at least 12 months. So it's a working capital loan that we actually do offer as well. So we're doing a lot of those. It just started maybe about 4 or 5 months ago. So that's our two go-to products to help our startup businesses.
Okay. And thank you so much, Trina. And speaking of the go-to programs, Bev at Lantern Capital. So you spoke about, different products that you guys are providing with real estate and small business loans that you're sourcing for them. What's one thing that people are coming to for Lantern Capital? Oh, you're on mute still.
Okay. As our roots are pretty deep in the equipment finance industry, we're one of the top 5 in Canada. So still to this day, most of our originations continue to be in the equipment finance space. Honestly, and we work with our banking partners at TD with their equipment finance division being TDEF. So we are a partner with TDEF and all the other bank-owned equipment finance companies and credit unions. So the benefit of dealing with us is on the equipment side is our clients don't have to pay us anything for our services. Our lenders pay us, and we can find a home for prime all the way to subprime and everything in between.
Okay.
And we are a fintech, so we have an origination portal, both for our vendors as well as our end users, where clients can go in and apply and are totally on top of their application, where all the updates are given. And so that's what makes us special.
Okay. Fantastic. Thank you. So since we are talking to you, Bev, what do you feel that, a small business or for anybody with the professional services that they're providing, what should they be focusing on to make sure that they get good financing products or to maintain their current financial positions to get those good rates out there?
Just banks love professionals as long as they have good credit.
Yes.
So just maintain your credit score, you're good to go. Every bank seems to be having a professional services program or coming up with one.
Okay. And, obviously in the Canadian economy, we have an influx of new immigrants coming to this country all the time. For a new immigrant in this country, what would you say is good way of getting that good credit? What's step one?
People think applying for too much credit is not good. Apply for credit and pay on time. credit score, the way the credit score algorithm works, and we are Equifax customers, and we get on a call with them on a yearly basis for latest updates. Is they look at how old your the last opened credit facility is, and don't close old credit cards. Keep them open even if you don't use them. Maybe sometimes use them, but always pay on time.
Yeah.
So that's number one, how old your score has been established or traits. Number two would be credit utilization. That's a big thing as well. Pay on time, that's fine, but you're always making minimum payments on all of your trades. Then if credit utilization is over 50%, then that impacts your credit score in a negative way as well.
Yes.
Yeah, I would say those would be the two key things on the credit score.
Yeah. And while you were talking, I was looking at Saurabh and Trina, and they were both nodding their heads. Guys, you want to add in something to there? So like, what do you feel that, a business owner or so I guess we'll start with Saurabh first. Saurabh, what do you feel somebody should focus on to maintain a good financial product, or if they're looking for a path for growth, what should be their focus?
So first, I'll tag on to what Bav was talking about. In terms of the credit availability, credit score, or credit utilization, I think Bav has given the key mantra that anyone needs to follow as an individual or as a business owner. But one thing that I always advise clients, whether they are going to eventually become BDC clients or not, is to ensure they max out the facilities that they can secure, whether it is personally or it is on the business. Many individuals are fearful of how they'll be perceived, and as a result, they don't want to apply for more credit. The key, again, as Bav mentioned, was not having credit limits. It's how you treat them and how you run it. Same goes for a business. I have clients who have, or at least who talk to me, who've got good receivables, but are not sure or confident enough to go talk to their small business advisor at the bank. Do so. Have that conversation, make an application, figure out how it is that the bank can help you with, and get yourself the limit. And then try to work within your cash flow, and don't always be out there stretching and diverting the funds towards unnecessary business utilizations. Now, in terms of the perfect answer, I'll take the banker's hat off. BDC has a good advisory solution practice. We have over 500 consultants, professionals who've been in the industry, not banking, but outside also, who know the manufacturers, who know the hospitality, who know every industry, and they're able to strategize for business owners. And the biggest takeaway that I would want to impart here to any entrepreneur is, at the end of the day, try to focus on how you're going to run the business as efficiently, rather than getting too much bogged down with your day-to-day. So if it means taking a step back and being open to seeking external help, please do so. Don't just try to run it within your own problems, because an owner's world is very lonely. You've got your employees, you've got your suppliers, and you've got customers who keep you bogged down. The critical thing is, take a step back, take advice, whether it's your accountant, whether it is an advisor on the outside, but be open to those conversations in order to improve your business.
Yeah, you've hit the nail on the head there, Saurabh. Definitely have experts when you need it. And nobody is an expert on everything, so it's always good to get that extra help in. What do you think, Trina? From your perspective?
I totally agree. Absolutely. So one advice I usually give to business clients, and again, to Bav's point about utilization of credit, it's always good to establish business credit and keep the stuff separate from your personal. Otherwise, there's a tendency to have larger balances sitting on your personal credit cards, which directly impacts your credit score and can affect your personal lending as well as your business. So even as a startup business, brand new registration, TD is welcome to actually doing credit for you. We will do up to 50,000 in credit. It still has to be credit approved. We base it solely upon a person's personal net worth and their credit history. So again, that's vital in order to achieving it. So we are willing to, take a risk and basically help you with your venture. So even if you're a brand newly registered corporation. And I totally like Saurabh's idea, and I do piggyback off that, is that getting the help and the advice off the start can save a lot of headaches and basically put you on the right path.
Yes.
So it can save you time and money, and that's totally essential as you're getting started and being successful in business.
Yep. Coming from the factoring world, Trina, what you guys are saying, I 100% agree with you. Even when clients are coming to the factoring world, sometimes we say we are not a credit-based lender, and even if your scores are low, we are focusing on who your customers are because that's where our credit focus is. But at the end of the day, we are also telling the owners of the business or the officers of the business to focus on their personal credit, because eventually the goal is when you grow to that level, we want to introduce you to a BDC, a TD, or get you in touch with BAV and get you a better, cheaper product out there for their growth needs, because now they qualify for that. So absolutely understanding what all three of you have said is really important when they're charting their path to growth, right? You have to focus on these things. So given that, now that we've talked about from a personal perspective, what the owners need to focus on or the professionals need to focus on, from let's start with Trina, since you were talking, given the current economic path we are on, are there any criterias or covenants that TD is focusing on or you focus on more with let's say, they have to maintain their financials, or anything that you would suggest that they put more focus on right now?
So I think what they're doing is we're still open for business. We're still doing lending. We are looking at some deals a little bit differently. So the couple of the ones that we are, unfortunately, there's a little bit of a slowdown in trucking. So we are still doing operating lines of credit for trucking companies. And when we're actually reviewing the accounts receivable, they're doing more of an analysis, I'm finding, in the actual the amount of the receivables, the amount that are going over 90 days. They're wanting to see the concentration of the companies to make sure that there's a good diversity should something happen to one of the companies that they're actually dealing with. Mm-hmm. So we're just finding that a little bit, and we are cutting back just a little bit on the actual limits that we're doing. But again, we're still open for business in that industry. Mm-hmm. Because I work in Brampton, and of course for a transportation hub, that's the main focus for some of our, especially us in small business, and as well as my commercial counterparts. Mm-hmm. And then another thing that we're looking at is we're also seeing that there's a little bit of a slowdown in the investor units for commercial properties, given that there is a higher vacancy than normal. After the pandemic, with a lot of people, continuing to work from home, people are downsizing their office space, trying to go more shared workspace because of the fact that their company is still viable with people working at home. So we're finding those two, we're just doing a little bit more diligence on. We're wanting to see a really good key lease if someone's going in. If not, we're looking at, the personal net worth of the client to make sure that they've got some backing should there be a vacancy and there's not an actual tenant in the property. So we're just looking a little bit different, but again, we're still doing lending on those.
All right. And how about you, Saurabh?
I don't think it'll be much different from what Trina actually mentioned. Are we open for business? Yes. Are we going to look at certain sectors with a little bit more analysis than we did, say, 18 months ago? Transportation is one of those sectors. In the automotive world, you got businesses, manufacturers who were heavily focused on the EV side, because we've seen a marked slowdown over there. Does that mean we aren't there to support them? No, it's more a question of let's have a conversation. Let's try to figure out how you're trying to overcome this hump. What is it that we can help to bridge the gap? And the one thing that we always, and at least I always ensure to every business owner is, don't just talk to us. Talk to your main bank. If need be, let's both be there on the table, because the point is nobody wants to see you not succeed. But let's sit together, let's find a solution in order to make sure you're able to either overcome a hump, whether it's nowadays I'm hearing the wonderful news that came out yesterday with the 25% tariff. proposed tariff? Are clients worried about it? They're chatting about it. Is that thing going to play out? Who knows? Would we change how we do our lending? Not yet. But the point still is, for a business owner, focus on the basics and you would be okay. If you take care of your aspects, whether it is a slight slowdown and how you're overcoming it, talk to us, talk to your banks, talk to everybody. No harm can come from any conversation. And let's try to find a solution and let's be patient about it.
Before I move to Bev with this question, thank you, Ritu, for posting the note in the chat. If anybody has any questions, we will be having a question answer period at the end of the session, or as we go along, feel free to post your questions in the chat so we can take that up. And if you have a specific one for Saurabh, Bev, or Trina, or even myself, feel free to do so. So Bev, what's your criteria or covenant that you guys are focusing on, or any industry that you guys are steering away from right now?
Well, being brokers, I mean, we actually thrive on times like these because we talk to our lender partners on a monthly basis to get to know about how they are dealing with the situation with different type of industries. Are there any policy changes? What are they lending on these days? And how are they winning those deals? So we can cater our clients that come through our doors and basically send their credit packages to the lenders that we think should be approving them. So make it more as much efficient as possible. And we do use AI for that, where we gather all the client notes, and then we match them with the needs of a certain clients on smaller deals for now. So now the idea is that with us, we have lenders who have no covenants. And then we have lenders like banks and BDC who have covenants. So depending on your situation and what your current goals are, you're looking for, obviously, if you are looking for the best rate, then bank is your best bet, then you have to be okay with covenants. But if you're looking for more growth, then Abhijit, you and me both know, being an alternative lender, you have no covenants, you're not looking for the DSC or leverage for setting somebody up with an operating line. So definitely you're the option there, right? So we are open for business, and trucking or no trucking, we can find a home.
Okay, fantastic. And so steering away from a little bit about covenants, the serious talk that clients have to maintain. How long does it take for a typical facility to set up? Let's say at TD Bank, like if somebody was to come to you today, Trina, and say, I'm looking for a financial product, how long does it take from start to finish approximately for a lending product to be established?
So a lot of our microcredit usually takes 1 to 2 days for adjudication, and then an extra 1 to 2 days for funding. So within a week, we can actually have a lot of our smaller credit facilities up and running. So whether that be loans, lines of credit, a lot of our mid-size loans and lines of credit usually take 4 to 5 days for adjudication. And then we also have, 1 to 2 days to get everything funded once we actually meet all the conditions. Our larger mortgages and stuff, we usually recommend at least 2 to 3 weeks because we need to do an appraisal, we need to do site visits. But of course, there's always rush protocols, and we can push something through the system if it's warranted to get an actual rush escalation. But otherwise, we will work with the customer and the immediate needs to get things set up, as quick as possible.
That's very good. 2 days for adjudication. That's amazing, Trina.
Yeah.
How about you, Saurabh, at BDC?
So at the BDC, we have got a virtual platform also. So for non-BDC clients, if they're looking for a cash flow loan till about 100,000, they don't need to come into a branch or chat with anyone. They can make the applications directly. And most times, depending on how much of a rush they've had, they can turn around pretty quickly. For our smaller loan guys, again, there's a preamble to whatever anyone will tell you. There's never a perfect package.
Yeah.
Most clients will never come to you with all the information on day one. And so if I was to just talk about how much time that the bank thinks the day a perfect package comes in, depending on the small loan guys or what I do, your process could be for an equipment mortgage running in about a week to about maybe 2 to 3 weeks time. The question is, when does that clock start? When do we actually attempt to do it? And that's when the package is either complete or pretty close to being done. So for anyone who's out there advising their clients or friends and family, be sure that you have the paperwork, or at least make sure the stakeholders, your internal accountants, your external accountants, they're all on board with your need for funding. Because most times the client is motivated, but their accountant is busy, or someone else can't pull out the information. And rather than always thinking of when I need the money, then I'm going to invest in my system. When in times you don't need the money, please invest in your system and in your people. So when you do need the money, you can have the information within a question of minutes, rather than wasting weeks trying to get that information. That's my only takeaway. But most banks will turn things around based on client needs very quickly.
Yeah. I agree with you. Sometimes, even I have to tell clients in factoring, I can set up your account tomorrow. It depends on how fast you get the information to us. The only thing we don't control is how your customers respond to our verifications. But we are open for business and set up your accounts tomorrow. But it all depends on how fast the client provides the information and how clear the information is.
Right.
How about you, Bhav?
So
from a broker perspective, I understand.
We tend to get responses faster because of a couple of factors. We know what a good package looks like.
Yes.
So we would work with our clients even before submission to prep the package properly so we can get faster responses, number one. And we're work with the client and their accountants and their CFOs and whatnot to facilitate that. Number two, since we have a relationship with our lender partners and we totally understand and they what kind of package they're looking for, we cater the package to their needs. So they're actually looking forward to their inbox lighting up with a package from Lantern. I hope. It mostly is. So those factors actually help us in getting faster responses.
Yeah. And, it helps about that, at you at Lantern Capital, you understand that if you're bringing a deal to a factoring company, what they're looking for, a BDC or a TD, what they're looking for. So you're already guiding, you are that expert that I was talking about. Sometimes if you're a small business, you want to go to a lender. Sometimes you want to talk to an expert and say, hey, I'm looking for this kind of product. What do you think should be the best institution for me to go to? Same thing, if you're going to a banker, make sure you ask them, is this the right product for me? Or would you suggest never be, I feel that all of us in the finance industry, we are not afraid to say, hey, I don't have this, but let me introduce you to someone who has this. Like for me, people come to us all the time and say, hey, do you have purchase order financing? Absolutely not. But I can certainly, introduce you to people here in Canada or in US, wherever they need to go and get you the right product. So always, whether you're talking to your banker, you're talking to, TD Bank, BDC, Lantern, don't be afraid to ask that extra question. What do you think would be the best lending product that I should get for my business needs? Because everyone's business needs are different. So I absolutely agree with all of you. So we are coming to a little bit of end tail of our present, talk today, but given the economy the way it's going, every 2 days some new news comes up with the tariffs and the rates going up and down. The inflation was getting better, now it's 2%. What do you think the I think it's December 11th announcement would be? Do you think the interest rates would still be going down, or what's your bet on 25 basis points, 50 basis points? What do you guys think? And I know I'm not talking to economists of the banks, but you guys are the ones that see day in, day out client files. What do you think?
Who's going first?
Yeah.
Okay.
Go ahead, Saurabh.
I'll take a stab on this one. And this is, so we had attended an event where a chief economist was invited to our area back in October. And it was his estimate back in October, this is before the US election and everything's the way they were going to play out, was we were expecting a rate cut both in December and the first one in 2025. Whether it would have been a half a point or it's a quarter now and then a half a point, that's to be seen. Overall, if I was to now say, as Saurabh, a non-BDC banker, I would say I would agree with that. There would be a cut. Is this cut necessary because the economy is struggling? Yes, we are facing headwinds on the housing market, the construction activity, like Trina mentioned, the transportation and certain hospitality sectors also because of supply chain issues. And the costs still are impacted. But overall, there is a positive growth story here when you look at the GDP numbers, even with there being stress tests done on net immigration being curtailed. Would that lead to a recession? Chances are, so far, the indicators are no. But with everything that's happening down south, with the potential tariffs or anything other than that, I think the rate cut would be needed to some level, of course. I don't believe in the crazy mindset that people had back in 2020. The rates need to be zero. That's not sustainable.
Yes.
As a business owner,
as we've seen,
as a business owner, as a consumer, I would like that, but not as a responsible person in the banking industry or in the economy. It's not sustainable for a country. So you do need that interest rate to stabilize at some level, whatever that is. I'm not going to make a comment. But yes, we would see a cut in December. We would see definitely something happening, if not Jan, by March.
Okay. And how about you, Trina?
From what I've heard and read as well, yes, basically we're expecting, or at least that there was talk of an actual rate decrease in December. Again, that was before the U.S. final election, and that's before the trade talks and the tariffs and that kind of stuff. But that's agreed. I think that we actually do need to, build confidence in the market and give some people a little bit more, cash flow, because there is a lot of people right now that are struggling with their payments and everything else because they've gone up so dramatically. So I think it's needed, and that's why the government, I think, is trying to at least help everybody.
Yeah. Matt?
I was pretty optimistic and almost dead sure it's going to happen, but with the Canadian dollar tanking the way it is, I think we are in economists are in a bind. How do you protect Canadian dollar? Because it should have a deflationary effect. So I'm not sure, but I think the economy still being in trouble would probably trump over the Canadian dollar. So we might see a decrease, yes.
Yeah, I kind of agree with you, Bav, there. Obviously everybody sees economy from their industry's perspective, and me being from a factoring world, I am very optimistic. Everything's going to go great. So I'm going to say 50 basis points between December and January. I was 2 days ago, if somebody asked me, I would have said 50 basis points in December. But now let's just stick to between December and January, right? With the Canadian dollar yesterday reaching 61? It was...
70.
Sorry.
Yeah.
70. Sorry, 68 cents was the lowest in May 2020. But It was
If
70.
it's
Yeah.
if it becomes 61, I'm guessing everyone on this call will be applying
Yeah.
for H-1B visas to the US then.
All right. So thank you so much, everyone. Bav, Saurav, and Trina for sharing your perspective and also sharing about what products are out there for professional development for a business or a small business to take advantage of. From a factoring world, I'd like to also talk about a little bit about the different products that we have. I mean, we focus on non-recourse factoring. If we are lending on your receivables, we make sure that anything that we have bought, it's approved, credit approved. So you don't have to worry about what's going to happen 60 days or 90 days down the road. So that's kind of an insurance that if I'm lending you on your, let's say $100 receivable, I'm giving you $97 today. You don't have to return that $97 to me if your customer doesn't pay 90 days down the road for any credit problem. And credit problem could be a bankruptcy or insolvency as well. So I'm just giving you a $100 example, but this could be a $300,000 customer or a $500,000 customer as well. No limits there. But this product also helps out in conjunction with everyone else, whether you have an equipment financing from sourced from Lantern Capital, or if you have, your small business loans from TD, or you have your real estate facility from BDC, factoring can also help you out in those ways as well. So again, these are the things sometimes we don't hear about. Like, I would have never heard about my parents or my professors talk a lot about factoring or a small business loan or an equipment financing or even purchase order financing, right? Like these are the things sometimes nobody talks about, but there are products out there. If you take one takeaway from this whole conversation today, talk to your lender and ask them what other products can help you out. Or even if you're a startup company, I think all of us have one product that helps out startup companies. So that myth where, people say you have to have 2 years of financials or you have to have an arm and a leg to give away for a small facility to start. There are products out there that can help you out even in your first month of incorporation. So have a chat with your lender. All right, so I have a few questions in our chat. I will take that up. Okay. Anna is asking any clarity point on non-prime lenders like Go Easy. When does it make sense? Sorry, Anna, do you want to unmute yourself and maybe expand on that question?
Hi, good morning, everybody. For those of you who don't know me, I'm the Director of Member Services and Operations here at MBOT. I think I've met some of you, but believe it or not all of you, surprisingly. So thank you. So my question is exactly how I wrote, and under that I put down to understand. You had made that point, to really understand your options. So I'm asking anyone on the panel, when does it make sense to go? I guess it's non-traditional, your bank and all the other vehicles that are traditionally what we know. So when does it make sense? Because we all know that Go Easy, the percent is quite high, but then sometimes those clients that they have no other choice but to go that route. So that's my question. And I say Go Easy because they're a member and it's the one that I know. It's the company that I know of. So thank you so much for entertaining my question. You wonderful panel, you.
Yeah, absolutely. Anyone from Saurabh, Trina, or Bav, do you guys want to take that up? When does it make sense to go to a non-prime lender?
Sure, I can take it on. I think Go Easy, from my understanding, is more on the personal side and not on the commercial lending side. So I haven't dealt with them, but it seems like a subprime lender on the personal side. Black and white, if you can't get any money from a bank, then only then it makes sense. Otherwise, don't. Stay away.
Right. And so thank you for saying that. So who would be a comparable company to a GoEasy on the commercial lending business side? Who would that be? I'm not even familiar.
Nobody in our commercial lending space would lend at 60%.
There you go. There you go. Isn't that interesting, eh?
Yeah. Yeah. And, maybe let's take GoEasy out of that conversation.
Yeah, just because I know that's the only way.
Sometimes it's, it makes sense to go to a non-prime lender depending on what product you're looking for. If you're looking to finance an equipment and put down a down payment and maybe lease it, not finance it, there are a lot of options there. If you're looking for real estate and you're on the commercial side and you're only looking for land, sometimes you're not going to get a mortgage on it. So then you want to go to a non-prime lender and maybe look at your personal assets, pledge that. There are options. But again, talk to your banker first.
Oh, yes.
Before you think of a non-prime lender. And then obviously factoring, it's a commercial product. We are a service-based industry, and it's still a lending product. So it depends on which product you're looking for. Sorry, Saurabh, you had something to say.
I'm just going to slightly clarify to your point about if there is land. Now, if there is land which is currently zoned for your business, but whether you require a building or a structure for you to use it, then the BDC would be an option to finance the land.
Yes.
We will put a time-bound caveat in there that you have to have the zoning permits and the construction starting in a certain timeline so that you can start using the land. If you are buying land for development, speculation, investment, non-zoned, then essentially you are not your downright entrepreneur who's looking for money or funding for their business. This is more of a personal investment play. Then whatever sources are available, you'll get that if that makes sense for you. But if it's core business usage, then yes, you can chat with the BDC.
Very helpful. Thank you all.
Thank you. And so we have a question from Ritu. Ritu says, for a relatively new business, ready to scale and seeking funding, what's one critical piece of advice you'd give them to stand out and secure the investment they need? I think during the presentation, we did answer a little bit of that, but maybe in one sentence, what's one thing that they should focus on? We said credit. Anything else?
I would say just focus and basically have a business plan and basically have your thoughts and what you're actually planning to achieve with the business and everything sort of in line. And do seek, advice from your professionals, lawyer, accountant. And I think that being organized and knowing what you're actually wanting to achieve with either the financing or your vision for the business, that's critical in any success.
Absolutely, yeah.
And for anyone who's actually thinking of writing or figuring out how a business plan is to be done, you don't really need to worry a lot about that. Most banks, including BDC, I remember when I was working at Scotiabank, through their website, they have certain links that prompt you to make up a good business plan. So they will ask you those thought-provoking questions, and the more you'll sit down to figure out the answers to those, you'll realize how much you know about your business or the things that you have not actually thought of that a bank would want to see.
And one of the things, I agree with you, Saurabh and Trina. Like one of the things that we at JD Factors ask businesses to focus on is also their taxes. Make sure your taxes are up to date, right? Like a lot of people I have seen when they're coming to an alternate form of financing, it's because there's so much outstanding on the payroll deductions or HST still has to be filed, even though they're going to get a credit, and corporate is outstanding for like 3-4 years. It's such a simple thing to do, but that's where sometimes the lacking is from a I would say, a commercial lender's perspective, right? And that's why they go to alternate forms of financing. So we, on the other hand, JD Factors is, I think, the only company that takes level 1 access to their CRA account to make sure that we can keep guiding them throughout their journey with us to improve their taxes if they haven't already. Most of them, sometimes we get in touch with accountants and say, hey, just looking for some more guidance to be provided to your client so they can stay up to date, and we can finally transition them to a traditional lender. Maybe introduce them to Trina, maybe introduce them to Saurabh, or maybe introduce them to Bav and say, hey, Bav, what do you think would be the best product for them right now, right? But taxes, please make sure they're up to date. If you're in any kind of business, ask that question from your accountant. Again, if you're not an expert, get an expert in. What do you think, Bav?
Agreed. Listen, like your advisors, and we work, and that this is one of our biggest value proposition is working with the companies who don't have a CFO as their extended CFO, or even who have a CFO as a partner with their CFO, and especially with accountants as a CFO for their clients because they can help out with the CRA part and all that. But how does those numbers make sense in the financing world, the beautiful world of banking, is a totally different thing than filing for taxes. So we specialize in that. So definitely talk to us, and we can work with your accountant to figure out a strategy for your CapEx or anything that you need.
All right. We have a question for Saurabh. Magan Jagannath, he's asking, does BDC do franchise investment financing?
Not specifically as a franchise product. We would treat a franchise business as we would any business in the hospitality world. Depending on what the need is. If the need is, say, for example, a startup operation, then I would say what we would bring to the table is what Trina had mentioned, BDC and TD working together, whether it is them taking on the bulk of the information, whether through an SBL product or otherwise, and the gap would be funded by the BDC as a startup loan. If it's a franchise operation, which is a change of ownership, say, for example, then it's a different story. Then you're looking for cash flow financing based on the EBITDA basis. Then based on the profitability that is put out, we will figure out how much lending we can do to the enterprise value that is determined. But no, we don't have a particular franchise product. Every financial institution is different in that regard. I remember at Scotia, 3 franchises were back in the day were the top tier, and everything else was seen as part of the package. And I'm sure TD, Royal, BMO would have their own preferred franchises that they deal with. But chat with everyone, chat with us, chat with the TD, chat with Bav. Since Bav mentioned he also does the franchise, maybe he'll be in a better position to tell you if my franchise is of ABC, which institutions are out there, and then you take it from there.
Yeah, absolutely.
Just to clarify, Megan, TD does have special franchise packages with a lot of the actual brands. So depending if it's food service, we do, ones that say business services. We have some that's for contractors. So we have specific franchise programs. Majority of the programs do use the Canada Small Business Loan, but we have some of the franchise brands where we've got custom plans that we do term loans. So more than happy to chat offline if you wanted to reach out.
Sounds good. Thank you so much, Bav, Saurabh, and Trina for your time today. And if you guys have any questions, we will be, you can find all of us on LinkedIn. We'll also put our contact details in the chat, but I'd like to thank you all the panelists and also hand it over to our chair, Ritu, from the Professional Development Committee for our closing remarks. Thank you, Ritu.
Thank you so much. And thank you to all the panelists for a very insightful conversation. And we do have one request that if you could all please put your contact details in the chat, that would be very helpful. Thank you so much for that. And on behalf of all of the committee here, it's been a very exciting year for professional development. And before anything else, I would love to take a moment to thank the incredible team behind the scenes that you don't always see, that puts everything together meticulously, and all the very diverse events that MBOT puts together. Thank you, Stephanie. Thank you, Anthony. Thank you, Maha, Chelsea, who's on mat leave, and of course, Anna Adams, who oversees the entire department and makes sure everybody does what they're supposed to do, despite how many moments of stressful challenges there have been. So we would like to thank you for that, because you certainly enable us to do what we're able to do for everybody here. So that's my remark. And it's been a great year for this session, and we look forward to 2025 and the evolution of PD.